Hello, and welcome back to Explain the Charts, your go-to channel for in-depth technical analysis. Today is November 26th, 2025, and we are taking a close look at Litecoin, or LTCUSD. We'll start by covering the crucial news events shaping market sentiment before diving deep into the charts to see what the price action is telling us. First, let's talk about the news, because it's painting a rather gloomy short-term picture for Litecoin. The biggest headline is the struggle of the new Litecoin ETF, which has reported zero inflows for 5 consecutive days. This suggests a significant lack of institutional interest at the moment, which is a bearish signal, especially when other crypto ETFs have seen much greater success. Compounding this issue, we're seeing news that Litecoin continues to be heavily correlated with the broader market. A recent 6% drop was directly tied to Bitcoin falling below the $90,000 mark, showing that LTC is still very much at the mercy of the market leaders' movements. Analyst opinions are split, with some forecasting a potential drop below $80, while others maintain extremely bullish long-term targets between $1,000 and $2,000. This creates a narrative of strong short-term headwinds versus long-term speculative hope. Now, let's turn to the daily chart to see how this news might be reflected in the price action over the long term. Looking back over the past year, we can see extreme volatility. There was a major rally that started in November of 2024, taking the price from around $75 to a peak near $147 in early December. This was followed by a sharp correction and another attempt at those highs in January 2025, which failed, forming a potential double-top pattern in that $140 to $147 resistance zone. Since then, the price has seen several major declines, including a dramatic flash crash on October 10th, where the price wicked down to almost $55. That $55 level, along with the lows from August 2024 near $50, represents an absolute floor of support for Litecoin. The recovery from that crash has been notable, but the price has struggled to regain its former highs. Let's focus on the more recent price action to identify our key levels to watch. The primary overhead resistance is clearly the multi-peak area between $135 and $147. A break above this would be incredibly bullish. Closer to the current price, we have resistance around the $110 to $115 area, which has been a pivotal point multiple times. Immediate resistance sits near the recent high of $95, followed by the psychological barrier at $100. On the support side, the most critical level right now is the $80 to $82 zone. We've seen the price bounce from this area multiple times in the last month, including just a few days ago on November 21st. If this support level fails to hold, we could be looking at a move down to the next major support zone, which lies between $63 and $70. Looking at the last week of trading on this daily chart, the bearish case gets stronger. Notice the sharp sell-off on November 20th and 21st, which took the price from over $92 down to a low of $80. The bounce we've seen since then, from $80 back up to around $85, has occurred on noticeably lower volume. A low-volume recovery after a high-volume sell-off often indicates a lack of conviction from buyers and can be a sign of a continuation of the downtrend. This price action perfectly aligns with the negative sentiment from the ETF news. Now, let's zoom all the way into the 15-minute chart to analyze the intraday structure from the last few days. Here we can see that sharp drop on November 21st in greater detail, where the price plunged from $86 to below $81 in just about an hour. Since that low, the price has been grinding its way upwards in what looks like a classic bear flag or a rising wedge pattern. This is typically a bearish continuation pattern. The price is currently struggling right below the $86 level, which was the support area just before that major drop. This is a textbook example of prior support flipping into new resistance. Let's isolate the action since that November 21st drop. You can clearly see the massive volume that came in during the sell-off, which confirms the strength of the sellers. In contrast, the volume during this slow grind-up has been steadily declining, showing that buying pressure is weakening as the price rises. For the bears, A break below the lower trend line of this channel, particularly a drop below the recent pivot low around $83, would likely trigger the next leg down. For a bullish case to emerge, bulls need to push the price decisively back above the $87 resistance on strong volume, which would invalidate this bearish structure. So, to recap everything, let's pull back to the daily chart and outline our predictions. Your key resistance levels to watch are $87, $95, and then the major zone at $110. Your critical support levels are the immediate zone at $80 to $82, followed by the $63 to $70 area, with an ultimate floor near $50 to $55. Given the bearish fundamental news and the weak-looking price action on the charts, our primary scenario has to be bearish, with about a 65% likelihood. In this scenario, a break below $80 in the coming days or weeks could lead to a test of the $70 support level. This would be further confirmed if Bitcoin also continues to show weakness. Our bullish scenario, with a 25% likelihood, requires a strong, high-volume break above the $87 resistance. This would signal a short-term trend reversal and open the door to retesting the $95 to $100 range. A sustained period of sideways trading between $80 and $87 is our least likely scenario, at around 10%, given the recent spike in volatility. The key things to watch are Bitcoin's price and a high-volume break of either our immediate support or resistance levels. That will be your best clue for Litecoin's next move. And that concludes our analysis of LTCUSD. Thank you for joining us on Explain the Charts. Please remember, this content is for informational purposes only and should not be considered financial advice. Always conduct your own research and analysis before making any investment decisions. Trade safe, and we'll see you in the next video.